Vikram, good morning. Thank you for joining us. I came back from a road show when I was meeting a lot of foreign investors, and the sense I've come back with is that India is a great story, but for the moment, given what is happening to the world, next 6 to 12 months, a great story like India has also hit a pause button.
I think that point is, expressed by a lot of investors, and this is happening more because of the internal factors, Nikunj, not because of the external factors. The internal factors are two. One, clearly, I think the policymaker have to move from worry about the global stability to the local growth. I think that's a very important point which the local policymaker has to do, both government, which has to kind of speed up the reforms, speed up the investment cycle, and I believe RBI also need to kind of look at the growth more than the external stability, which is what my view. And that has been a view right now. If you look at from the global point of view, India is in a super position because you have less trade linkages to world, your super oil prices benefit coming to the country, the whole commodity cycle is down, it's almost at 10-year low and the demand is collapsing, supply has increased. So we are in a best situation. I don't think so anyone can expect more better situation for a country like India, who is a net importer of oil or the capex equipment. So I think we are in a super sweet position. Even the outflows are not happening so much. If you look at Nikunj from the flow point of view, the FIs are not selling too much compared to what they are selling in the other world like Korea and Taiwan, which are more linkage to the trade linkage to the China. So India is in a super good position. Domestic flows are back. Domestic saving is improving. So I think if you look at from overall point of view, we are in an extremely good shape. I have never been a bullish in last 5 years like today that we are in a great shape, and there is no Modi premium now in the market. If you look at a dollar return, we are actually negative in the last 1 year. So finally, I think we are in a place where the valuations are attractive. Your financial savings is picking up. Your FIs are not selling too much because India is a very different story than the rest of the world. You may have some linkage on the flow side. And I think we need to kind of focus on internal challenges, which is, policymaker has to work hard to get this ball rolling, get this reform track or the expenditure track to be fast enough. And both from RBI point of view, RBI need to cut the rate sooner or later.
Vikram, hi, good morning. So what's the assumption the market is working with? You stressed about RBI twice. Right. It's next week and we will have the RBI governor really make or break the markets. What is the sense that you're getting about the quantum of the rate cut, which is the need of the hour right now? Because a lot of experts that we've been talking with, they say 25 bips rate cut is not going to really nudge the needle. The need of the hour is actually a bigger quantum, that of 50 basis points.
My view is delayed. I think one thing I must say that RBI has been very slow in cutting the rates, and of course the transmission also doesn't happen. That's the other thing. But I think what I see from RBI's point of view is they are worried too much about the external stability. But I'm not too much worried about the external stability because we are not so much linkage to the world, barring few export side of it. But overall linkage is not as high as China and Korea. If you ask me, I think RBI need to cut 75 to 100 basis points in next 6 to 8 months. I think they may cut 25 now and they may cut 25 again. But if you ask me to revive, if you want to revive this economy, and what exactly, if you remember in 2008 post Lehman crisis happened when the oil prices collapsed, I think the rate cut along with the reforms has actually kind of pushed back India. India has been in a very good spot post 2008 till 2010. I think both finance minister and the RBI and the planning commission worked together and kind of brought this change. I think we need to have something like that happening from both policymakers, both from government as well as the RBI. So I think they should cut between 75 to 100 basis points in the next 6 to 8 months.
If I look at the outperforming groups, Vikram, the outperformance is still with pharma, to large degree large cap IT, and then select consumer names. So when everyone is making a constructive case for economy to come back, and when there is enough and more reason why one should avoid one should move from quality to growth cyclicals, that transition clearly is not happening.
With you, Nikunj, 100% what you're saying in a short term and whatever you see from a screen, what you're saying is exactly right. But I think that's not going to be the very long term kind of approach. If you want to revive this economy, because if you don't revive the local sector, even your export someday is going to kind of collapse. Because if you don't improve your infrastructure, if you don't improve your productivity, you're not going to finally be competitive in export also. And look at the global currency, how they are behaving. My point is that the government is kind of very clear that they need to improve the capex cycle, the investment cycle, and they're doing a bit on the infra side of it, because industrial you can't really work hard because industrial is more private. But on a public spending side, the infra side, there's a lot of activity in transmission, roads has been started. I'm seeing a couple of companies, I'm talking to a lot of companies which is, their order books are growing very, very fast compared to last 4-5 years, their order books are improving. So I think you need to ultimately tackle the core issue, which is the local issue. I know the short-term performances towards IT and healthcare, and which are great sectors. I think that sectors will continue to deliver 15 to 18% growth year over year, because they're in a very, very good position. The healthcare is in very good position, so IT. But I think the real big outperformance in long term has to come from the domestic sector, because you are ultimately relying on 75% local economy, right? The local consumption is a bigger thing. So if you want to really push this, otherwise we are in the same situation. India is in a cyclical slowdown for last 5 years, Nikunj, and I think if you don't improve that, we will continue to have the cyclical slowdown, and you will have a same IT pharma outperforming, consumer outperforming, urban consumer, and you will see the rest sectors are in a bad shape.
You've talked about, your like towards consumer as well, Vikram. So, I mean, is there a clear diversification right now? Stick to the urban plays? What is it that you're recommending within this sector?
I think clearly urban consumption is looking quite good, because if you look at the three things happen to urban consumption. One, clearly the lower inflation is helping them. There's more money has been saved in the pocket of consumer. The lower fuel prices are actually helping them, and I think that there is a revival of confidence in few sectors which are helping the urban consumption to tick up. Rural is of course little down, but I think urban consumption remains a good thing, which you buy through a auto, or you buy through a discretionary, or you buy through the white goods. But I think urban consumption looking quite interesting selectively within these sectors.
What makes you bullish on capital good? What makes you bullish on engineering stocks? There is no clear evidence of demand pickup. I have interacted with couple of CEOs of some of these engineering and some of these capital good companies. All of them are just making one opinion, that as of now there are no green shoots, capacity utilization has not picked up. What happens after 12 months, what happens after 2 years, that's anyone's guess, but I don't think the pain is going to be over in interim. Are you early in that trade?
I think today morning there is a statement from Mr. Nayak that nothing is happening in the ground, and they want to sell some of the non-core assets. I think most CEOs are talking about that. But what I see the change, there are two things which is important you to see. As I told you, India is in a last 5 years of cyclical slowdown. So I don't think this cyclical slowdown in the infrastructure segment cannot remain for too long. And government has been putting right effort in transmission side, the road side. There are so many orders released in the road side. There is the work happening on the coal sector. There is the work happening on the energy sector. So I think there is the movement. But my view is that they need to speed up this. That's the one view which is very clearly coming out, that they are slow, and they need to kind of really focus more on that. That is one. Second, what's happening in the road sector? I'd seen few companies' order book has been at 5-year high. If you look at, and also the weaker companies are weeded out because they can't bid. So there are few companies which are looking very interesting. If you have a couple of 2-3 years view, they are not at a premium, they are at a kind of discount. So I think there's a lot of and with the interest rates going to come down in the economy, whether the RBI cuts or not, but the overall interest rates in economy is actually down. I think this sector has a huge chance of revival, and with the bad quality assets are out, the interest rates are good, with the kind of government focus on infrastructure is back. I think there's a good opportunity in this sector. Today it is not there. It is slow movement. As I told you, in the industrial side, there's a very, very slow movement on the ground. But I think if someone has to kind of really look at a 3-year perspective, and there's a government intent which I am seeing, I think these sectors can do really very well.
So Vikram, have you been in a buyer in the current market fall, or were you already fully invested?
We are buying, we are continuously buying, and we believe, I don't know whether the market can fall by another 5% or 7%, but it is in a much better position than what it was 5-6 months back. Nifty was at 9,000, we are somewhere at 7,800, the valuations have corrected. There's so many good stocks are available at a much cheaper price than what it was. And the best part is that there are so many stocks are benefited by the whole global slowdown. I'll give you an example of aviation sector. there are 2 or 3 listed companies, but I believe aviation sector is the biggest beneficiary of what's happening globally. One, because of the crude price down, and second most important is the change in the consumer habit. The consumer is changing their habit from traveling by the trains or the road to the aviation, because the difference between the fare cost is coming down. So I am seeing this as a habitual growth or perpetual growth for the aviation sector. Plus, quality of management in this sector has been very good. So I think if you look at from that sector, it's a small sector, but I'm just trying to say that there are many beneficiaries. Like you look at tire companies are beneficiaries, the lubricant companies are beneficiary, the auto anchors are beneficiary of what is happening around the globe because of the lower commodity prices. And we are buyers. We think that market is near the bottom. We really can't call the market at the bottom, but you may see some more volatility because of the global news. But more or less, India is in a bottom, or almost in a near to bottom range. So it's a great time to buy if you have view over a 1 year.
Okay, that's good to hear, Vikram. We always like positive and bullish voices on India. Thanks much for taking the time out and speaking to us today.
Thank you so much.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.